Hello, and thank you for watching the XT Financial Services chart review video. I'm Zenia Taubina, and in this video, we will look at the state of the daily charts of the 6 markets that I analyze most closely. These are S&P, NASDAQ, Russell, TLT, GLD, and GDX. Let's begin with the S&P 500, SPX. So, as it stands currently, S&P was able to make the higher high that would have been ideal to the larger degree picture. So last time we looked at this chart in this video, it was somewhere around here. Since then, actually even here, I took a few weeks off for personal reasons. And since then, we did get the advancement to the new highs. This is the ideal scenario that I was tracking before that. And it's beginning to show some topping action. So as it stands currently, a break below this line, which is a 57.67, would be a pretty good indication that the rally off of the April low has topped. But until then, for as long as 57.67 is holding, and ideally for as long as no sustained break below 59.43, which is this red line above, is holding. S&P ideally could and would proceed somewhat higher towards the upper portion of this target box. So mindset here is look for signs of topping, but it's not yet in a position to say that it likely has topped. After it tops, the April low, which is 48.35, will become a critical support. So if S&P breaks below 57.67, the rally of the April low will be favored to have topped, and a potential for another similarly proportioned decline to set up another advancement will exist. But if the April low is breached, and at this point I would say that any breach of the April low would suggest a larger degree top in the S&P, so that's rally off of the 2022 lows having topped, and would open up some very bearish scenarios. So viewing it as in the latter stages of a larger degree rally, but not yet, no indication yet that that has confirmed, that has completed. Now let's move on to the Russell 2000, which is a bit of a different picture than the S&P. And in Russell, there remains a potential for all of the larger degree rally to have already completed, and that for Russell to come short in its advance of this prior high. And that potential is reasonably high, much higher than it was deemed to be in the S&P 500 before it made higher highs. So viewing this even more cautiously. That said, the way that the rally off of the April low is progressing is did open up potential to a minor new high to develop in Russell 2000. So this is more of the stance here is really one where we have to see if there's a breakdown. So for as long as there is no breakdown, potential for a minor new high does remain. If there's a breakdown, and the breakdown would be what it would take for me to view it as a breakdown is firstly a breach of this 2088 line. That's the first red line here. First red line was the red triangle. And then the second support, which would provide a more clear indication that rally off of the April low completed, is at 2011. So that's the second red triangle over here. So if that completes, it will favor this segment to have completed. And then would have to see whether it can hold over the April low and produce another extension higher, or if it's ends up breaking below the April low. So really, this would have to be a matter of how action is proceeding in order to determine how likely it is that we have a top. So a bit more murky than the S&P. Now let's move on to NASDAQ. NASDAQ is in a similar stance to the S&P 500. So here, the first line of support is at 21,532. So this first red line over here. And for as long as no sustained break below that is seen, potential to advance somewhat higher into the target zone remains. A sustained break of this first support would be first indication of completion of the entire rally of the April low. And a stronger indication would require a break of 2613. So that's this red line was the red triangle. And same as with the S&P 500, if this break of the second support is seen, the immediate segment of the April low will be favored to have completed, and with that would open up potential to a larger degree top. However, to make that potential likely, NASDAQ would need to proceed below the April low. So if the April low, which is 16,542, is broken, it would favor all of the rally of the 2022 low to have completed, and with that would open up some very bearish potentials. Until such time, a decline that towards the April low that holds the low could potentially produce another extension higher after that. So now let's continue to TLT. So TLT completed a retest of the 2023 low. As we can see, in May, it tested that low but did not break it. Those of you that follow my work on the weekly and daily service know that I was bearish into this low and I turned neutral here. And so far, it's spent the last month and a half, almost 2 months now, consolidating in this decision range. So for as long as 9021 is not exceeded, it has potential to be setting up for a breakdown. But to make that potential likely, it needs to continue down below 8140-ish. So this red line was the red arrow. And if that is seen, it would open up much lower targets, 65 to 70 area. So over here. For as long as this level is not broken, so it could potentially even slightly breach the May low and slightly breach the 2023 low, but for as long as it's holding 8140, it could be viewed as either having bottomed or bottoming, and with potential for a rally to develop afterwards. Now, on the upside, if 9021 is exceeded, it would favor further upside with the 9409 first target and potential for even the 2020 early 2025 target high to be exceeded. So these are the basically, for as long as it's in this range in between the two arrows, I really don't have much to say with regard to its positioning, but a break to either of those would be a strong signal of what's to come. Okay, now let's move on to gold, GLD. So in GLD, we have a rally that could have been completing, but so far gold has given no indication of such completion, and instead the pullback of the April high was clearly corrective and failed to break the prior low. So, and instead it's building a bullish structure off of the May low. So the way that this is positioned now is After not confirming the top at a smaller degree, there was bullish action that was preceding last week and continued last week. So I'm viewing it at least as near-term bullishly. And again, those of you in the daily service and weekly service know about that with respect to bias and positioning that I've implemented. So now we have to see how whether it's able to proceed to a new high or not. So any new high here would open up a path to 351 to 364 and potentially above that. We'll have to see how it gets into the zone in order to determine more specifically. As it stands now, it's doing what it needs to be doing, and towards the end of last week, we got early stages of confirmation to that near-term bullish stance. But it yet remains to be seen whether it can make a higher high or if it's just going to stage a larger bounce and then reverse down out of that. So cautiously bullish here, really below, well, this is based on my more nuanced work in the daily service, but 306 GLD is the last line of support that I have for it in terms of the near-term bullish stance. So below 306, I have to view it as neutral. And if it breaks 287.91, so that's the red line here with the red triangle, that would reopen bearish potential, which would then have a long way to be confirmed, but that's kind of where we stand near term. So now let's move on to the final underlying, which is GDX. GDX I view similarly to how I view GLD at this point. There was potential for a top. It's not doing what it needs to do to confirm such potential. And the only difference is that last week's action, while it was substantiating the bullish case in GLD, in GDX, it's a bit more murky. So a bit less strong of a stance than GLD, but nonetheless, bullish potential remains. And at the finer degree level, the smaller degree, 5160 is my last line of support for the near-term bullish stance. Again, this is based on the more nuanced work in the daily service. And below that, I become neutral for as long as 4510 is holding. So it could potentially produce a bigger pullback and reestablish bullish stance for as long as this level is holding. It would take a break of 4510 for me to view it as a top of significance, having seen a top of significance. And on the upside, it would take a rally over 57.57 to open up higher targets of 59.71 to 72.88. So this red zone over here. And that concludes the chart review for today. Thank you for watching.